we've seen the fixed rates go up. We've seen them creep up. And every day I'm telling clients that are up for renewal in March, we need to lock in this rate. Like the rates are going to increase and it's going to be too late. The ship's going to leave the port and you're going to be locking in at a higher rate.
You're listening to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. And now, here are your hosts, Paul Stevenson and David Warren.
Hello and welcome back. It is 2025. My name is Paul Stevenson. I'm joined by David Warren. David, how are you? How are we doing? What's going on? We're back.
We're back. It's been a little bit of a hiatus this last month. We planned doing a live show, and then I was outrageously sick, and then holidays hit, and it was I feel like it's been more than 4 weeks that we've been off. It's wild. I started getting texts this week from some listeners.
Yeah. That's what I was gonna say. I've had the same thing. People being like, "What's going on? You guys, have you given up on the show?
Are you alive?"
Yeah. So thank you to everyone for your patience. Okay, but we are here. We are back, and we have no plans to end the show. So don't worry. One big piece of news though that we should share with everyone before we get into it. Quick update. So Greg will no longer be hosting the show with us on a weekly basis, but he is going to be sharing updates with us monthly. So fear not. He is preparing to launch a new YouTube channel focusing on many aspects of real estate in the month of February. So I'm looking forward to that. Definitely keep your eyes out. And he's very thankful for his time. He wrote me this. I'm very thankful for my time on the show. I'm excited for the next chapter of Toe Rep. And I want to remind everyone that this is not the end. Only the beginning for us all. Until the next paradise, he says. Which is very
Very Greg.
Very on brand for Greg. Yeah. We were happy to see, Greg's always got lots of cool projects on the go. So I'm very excited to see what comes next. But, we obviously value his input and his knowledge here. So looking forward to still having him chime in here and there. But we'll carry the ball, eh, Dave? We'll be okay.
We'll manage. We'll figure it out. We'll still fill these airwaves.
Yeah, exactly. We're looking forward to having some guests on as well this year. I know that, some of the feedback we got at the end of last year, kind of leading into that 200th episode, was that people wanted to see more guests, want to hear from more kind of industry experts. So we're certainly going to make a point to do that. And I thought it'd be fun to start the year off. Last year, we started the year by giving our 2024 predictions. And now that the year-end numbers are out, I think it would be prudent of us to reflect on how poorly or successfully we predicted the market over the last 12 months. I'm going to start with what we predicted. So we started with the two things we were looking at, two metrics were number of transactions over the year and percentage increase or decrease in value. So Greg said that he thought everything was going to stay the same. So he thought there would be no real change to the transactions or to the home values. You, David, you said that there was going to be around the average of transactions with, I think you said on the show about 17 to 18,000, but that was a complete guess. It was kind of like I watched it back last night. It was kind of like whatever the average is, I don't know, 17, 18,000. It was kind of like one of those like flipping, whatever, I don't know. So you said average.
Like and I said, like keeping the same. Exactly. Basically, whatever the numbers were, 2023, kind of keeping that going.
Yeah, and I said about 16,000. I thought it was going to be a busy year for transactions. And then value increase, Greg said same thing. Everything's going to stay the same. So average price won't change. And then you and I both agree to be about a 5% increase for the values. So let's get into the stats. Let's get into the year-end stats for 2024. It's what the people want to hear. So sales and activity. So year-to-date sales, here we go, reached 13,526. And that was up 11%, 11.8% from 2023. So pretty decent increase, like a 12% increase in transactions, large number. I think, we were sitting around 11,000 in 2023. So not surprising that it went up. Obviously, 2023 was a bit of an anomaly, but still not like record numbers, right? Like, I mean, that's, as you said, it's probably about the average, 13 to 15,000. New listings, however, rose 13.6% year over year. And pricing trends. So here's the biggest one. For the average sale price in December was an increase of 4.4 from December 2023. The year-to-date average price was $679,000, so up 1.3%. So, the increase of 4.4 from December from a year prior, that was, I guess, accurate. So I guess we were right for December, 4.4%. For the year, though, 1.3% growth. So pretty much on par, almost exactly what Greg said. So we were in the 0 to 5 range, and both of those numbers are kind of in that range. So does any of that surprise you, Dave? Does that ring any bells? Does that surprise you in any way?
No, not at all. I think it took the beginning of the year, obviously rates were still high. People were waiting and seeing. We did see we were kind of expecting when Bank of Canada started dropping prime that we would see a quicker uptick in transactional history or transactions, but it took a little bit longer. We've had 5 decreases in a row. And the last 2 months of the year was really much quicker. Like the volume was there. The price increases were there. I think it took a little bit for kind of those decreases to kind of start working through the market, where people then were like, you know what, let's start looking. And I found there was kind of this feverish market, the lead up to Christmas. There was a big push to get into a property before Christmas for a lot of people, or to at least find something before Christmas. So I think the beginning of the year, not surprising as far as transactional volume. I think leading into 2024, we were expecting earlier and quicker decreases, even though it still ended up 1.25%. I believe it was, isn't it? Through 2020.
Well, it's hard. The numbers are a bit confusing. So that's what my understanding, but I'll just read the actual pricing trends word for word, and then we can decipher it together here. So it says the MLS home price index, HPI composite benchmark price for Ottawa was $645,800, a 3.8% increase year over year. So it's not year to date, it's kind of year over year. So it seems like being that it's the end of the year, you would think that that's essentially for the whole year, right? Kind of like December 30th to December 30th sort of thing. It says single family homes were up 3.7%. So average price of $730,000. Townhouses and row units up 11.3%. Sitting at $533,000 on average, and then apartments $404,000, and those were down 2.5%.
One stat in there that's interesting is the total dollar volume for the year. So for the full year, sales volume was at $9.2 billion in Ottawa.
Yeah,
for an increase from 2023 of 13.3%. So values being up, higher priced properties being, kind of transactionally going more. So, probably relating to that 13.3% jump in total volume.
Right. Yeah, exactly. Yeah. And the sales, like we were saying, the units were up 11%. So that's going to add to that, but it's still that's a huge 13.3% increase in actual dollars. Dollar volume is pretty staggering. The other dynamics here I want to talk about, these are kind of highlights of the recent release of Orb for the stats.
Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction. At Geltin Poirier Avocats Lawyers, we love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you. For an effortless client experience that opens doors, call us at 613-744-4488 or visit our website at geltinpoirierlaw.ca. Let's get to the heart of your deal. Are you trying to grow your mortgage business? Centum has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with Centum. Learn more at joincentum.ca. Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big. Protect what matters most.
It just says months of inventory increased to 5.2 months, up from 3.6 in December of 2023. 5.2 is wild. That's so much inventory. And it says this is reflecting a more balanced market. We said, I think you said this many times, Dave, that 3 months is kind of like your balanced market. So 5.2 months is a lot, The ORA President Paul Sand noted that consecutive interest rate drops, higher insured mortgage limits, and extended amortizations, all of these took place kind of between August and December 15th of last year, have started to improve market conditions. However, challenges around affordability and inventory persist. It says buyer hesitation remains driven by limited affordable options, though seller optimism is rising with the expectation of improved conditions in 2025. Political changes add some uncertainty, but optimism is building for increased activity in the months ahead. That's a huge issue too. We haven't talked about it on the show. We haven't been back since both, I think, both Freeland and Trudeau stepped down since our last recording of episode 200. So pretty big shakeup. I mean, I know you're obviously pretty in tune with kind of what's happening, being that we're a government town, you know, with the political side of the economy and so on. So how do you see potential leadership change? Obviously, it's going to be temporarily a liberal change in leadership, but leading into an election year, like how could this shift the market, and what sort of positive impacts could we see on the housing market?
I mean, I think it's going to be very interesting year from that standpoint and what policies come out. I mean, it's based at least by the numbers out there and all polls and everything else that it's not a foregone conclusion, but it's a pretty high likelihood of a party change in power. You know, the liberal leadership change, I believe it's by March 9th to be announced, and then the election would be I believe it's 45 or 60 days from 45 days, I think, from then. So, you know, really, as we're leading into the summer months, we're going to have a new political party likely at the helm, which is promising to drop taxes to, you know, which, you know, would have them likely, if done, as kind of said, would have would stimulate the economy of kind of putting money back into Canadians' pockets from a tax perspective. How long that takes to roll out, to ripple through the market, I'm not sure. You know, I think there are other avenues, you know, and how that impacts the bond markets. You know, really, we've seen the bonds just from, you know, stronger than expected December employment numbers, very, you know, again, continuously strong U.S. employment numbers has increased the Canadian bonds by 25% just this last 5 days. And even yesterday, we saw a lot of banks increase their fixed rates by 15 basis points, you know, as a result. You know, how this kind of continues on and plays into it, you know, it's really in flux. I think the Bank of Canada is going to certainly continue to drop the overnight lending rate, which affects bank prime, which then obviously plays into variable rate mortgages. But, you know, as they continue that downward trend of bank prime, and most, you know, all of the top 6 banks are predicting at least another 1.25% by the end of 2025, and upwards of 1.75% by the end of 2025. So, you know, that's a pretty big drop, and puts, you know, right now most variable rates rather around the 4.6% range. Drop another 1%, we're in mid threes. You know, we're getting to 1.25, we're low threes on the variable. So, you know, how does that stimulate the housing market as well? It certainly increases affordability for everyone right now. You know, I know we have you know, this kind of plays into an article that we have, but, you know, we have 1.2 million Canadians coming up for renewal in 2025 on their mortgages. As they come up for renewal and maturity, and as rates have come down, you know, they're still elevated from where they were when they bought their property in 2020. But, you know, as people come up for maturity, they also start thinking about whether they should move or not. I see it all the time, and I'm sure you do as well, as like kind of the hamster wheel starts going as somebody's maturity date comes up, and they kind of think, well, should we, you know, it's been 5 years in this home, should we just renew and stay? Or do we want to, you know, life's changed over that 5 years, should we start looking at moving? It'll be interesting to see how that 1.2 million renewals affect the market, affect rates, and then also affect lending parameters, because, you know, are they constrained? Are those people qualifying? You know, there's been a lot of changes with being able to move banks and the qualifying, but yeah, there's so many different like factors affecting the housing market and the renewal market and the mortgage rate market that I think things won't really come to light or start to crystallize until like I think until a new party is even chosen, probably until like the June time frame, which with them we're already 6 months through the year.
Yeah, a lot to touch on there. So I completely agree. I think I had a conversation yesterday with a client. They had two properties that were both on variable rates right now, and exceptional variable rates. Like one was 4.3 and the other was 4.25, I think. Like exceptional variable rates. And they were considering converting them into fixed. And I said, like, absolutely not. Like, like just at a high level, like you're already below basically where the fixed rates would be if you converted it today. For anyone who doesn't know, if you have a variable rate, you can convert that into a fixed rate at any point in that term. So that was kind of the consideration here in the conversation. Like, should I convert it at this point? And I said, like, exactly to your point, like most major banks are expecting the overnight lending rate to drop at least another half to full percent. So, if you're 4.3, you could be as low as 3.3, 3.25 in a year from now. That's insane. Like there's no way, in my opinion, that fixed rates are going to get anywhere near that. If we can get sub 4 in the coming 6 months, I think that would be a massive win, because we've seen the fixed rates go up. We've seen them creep up. And every day I'm telling clients that are up for renewal in March, we need to lock in this rate. Like the rates are going to increase and it's going to be too late. The ship's going to leave the port and you're going to be locking in at a higher rate. And these are clients that are currently in, a 2-3% fixed rate. So they're already increasing their rate by 1 to 1.5%. So we want to make sure that we can benefit from that. The other thing I was going to say, Dave, that a lot of people haven't considered that I'm getting calls about is restructuring for clients that locked in kind of late 2023 in those high 5%, 5.79, 5.69. A lot of them are calling me. I did one this week, a calculation for a client. The penalty was $16,000 to break with their current lender. And over the next 3.5, 4 years, they were still saving over $30,000 between interest and payments by breaking and starting with a new lender. So even adding, like doing a refinance, which is a higher interest rate than a normal purchase or what have you, doing a refinance and taking that kind of higher uninsurable rate and doing it over 4 years, they were still, and adding the $16,000 on the mortgage for the penalty, they were still coming out ahead after 4 years by breaking and getting a better interest rate. So there are opportunities right now. If someone's in locked into a higher interest rate, call us and have that conversation, because you could be leaving like tens of thousands of dollars on the table over the next few years by benefiting from these lower rates. But again, when the rates go up, then obviously those savings are not going to compound as much, right? So the sooner you can have those conversations and even more consistently that you can have those conversations to kind of know where you're at. I know, Dave, we both do this, but, having that conversation every once a year on the anniversary date or at least every maybe 18 months to kind of see where's the market. Am I still in the best product? Is this still the best solution for me? What's my plan for the next 3 years? Am I going to be renewing? Am I going to be moving? Am I going to be refinancing to pay off the car that we just bought or the cottage that we want to buy or what have you? So very important to stay on top of your own personal financial goals, but also to have a plan in place and have those conversations, because so many times clients call us and they think they're in a huge jam, and then we just suggest a solution and I'm making it sound so nonchalant, but they just don't know what they don't know. And that's why we're here, is to help educate. And a lot of times people don't know that these sorts of restructuring things are available to them, which could save them that $35,000 or whatever over the next few years.
Yeah, I think I think they kind of looking at what the penalties are and looking at what that cost savings is important. There's 3 components to any mortgage payment. There's your monthly payment, the amount, and then of that, how much interest you're paying and how much principal you're paying on. So it's kind of looking at those 3 components as you're evaluating. One thing to kind of keep in mind when considering, or if you are somebody who locked into that, is the challenge would be if you bought with 5% down, that this is not something where this is going to be an option for you, or even 10% down, 15. Like this is if you have over 20% in equity available, because then we're able to tap into the equity in your current home in order to help cover the cost of that penalty. If you don't have that equity, then it would mean having to come up with it out of pocket. That's so that becomes a more challenging conversation, or something more challenging to obviously consider. Can make financial sense. Absolutely. I mean, the numbers are the numbers. But obviously if able to tack it onto the mortgage as opposed to out of pocket, coming out of your savings account, that becomes an easier conversation. So I just wanted to kind of clarify the differences there between the two, so that if you are somebody that bought with 5% down and you're hearing this, it doesn't mean that we can necessarily for sure help. There are, depending on what the penalty is, even if it's under $3,000, even if you bought with 5% down, we can actually cap a penalty of up to $3,000 onto the mortgage without that equity available. So still have that conversation. Let's evaluate what that penalty looks like to kind of set that roadmap out.
Yeah, and even talk to your lender, right? If you're with lender ABC, like maybe just contact them and say, listen, this is what I'm willing to do, and maybe they'll minimize that penalty if you're remaining with them or what have you. There's kind of creative ways to structure these things. I wanted to dig a bit deeper into the job numbers, Dave, because I think a lot of people are still very interested in the Bank of Canada's announcements. We have 8 again coming up this year. The general consensus, as we said, is that there's probably going to be at least kind of 3 to 4 rate drops this year, maybe even more. So these numbers are the things that really have an impact on that, obviously on top of inflation and everything else. So I'm just going to summarize. This was an article on Canadian mortgage trends. Strong job growth in December raised doubts about January's rate cut. So here's a bit of a summary. It says Canada's employment surged in December, adding 91,000 jobs. I'm assuming some of this is seasonal. It says with 57,500 full-time positions and 33,500 part-time jobs contributing to the growth. The employment rate rose by 0.2%, marking the first increase since January of 2023, while unemployment decreased slightly to 6.7%. Key sectors driving job growth included educational services, which added 17,000 jobs, transportation and warehousing, 17,000, healthcare, 16,000. That's a plus for sure. Finance, insurance, real estate, and leasing, 16,000 jobs. That's very interesting considering the real estate market we're currently in. Seems like a large number of jobs being created in that space. Wages and hours worked also showed gains, with average hourly wages rising 3.8% year over year to $35.77, and total hours worked up 2.1%. So it says the economic implications, which is obviously what we're focused on, the robust job numbers in both Canada and the U.S., which added 256,000 jobs in December, caused bond yields to surge, as we showed earlier. The Government of Canada 5-year bond yield rose over 11 basis points to 3.15%, it's now currently at 3.25. So the strong labor market may delay the Bank of Canada's anticipated interest rate cuts. Economists had widely expected a 1/4 to half point reduction this quarter, but these job gains now raise doubts.
Yeah, there was a, I think it's RBC or BMO. The chief economists, they had mentioned that came out that for their numbers, their prediction is of a decrease end of January. We're at 71% odds prior to the employment numbers coming out, but that's dropped to 60%. So there's still actually expecting it like as a 60% likelihood of a drop. January 29th rate announcement that might come.
Yeah, I was trying to I have them here. I was trying to pull up the actual dates of the announcements. I had it in my last week's newsletter, and I can't seem to pull it up here. So, so the other thing. Oh, here we go. Okay, so first one is January 29th. Okay, which I think, and we'll definitely do some predictions going at the end of the show again, just for years growth and so on. But announcements this year are going to be the 29th of January, March 12th, April 16th, June 4th, July 30th, September 17th, October 29th, and December 10th. So those are kind of the major dates to keep an eye on. And, leading up to that, so many factors go into that. I mean, as you said, being that the election or an election could be triggered as early as, I think you said March 8th or 9th, 10th, somewhere in there. So, I mean, this is all going to feed right into that. This is all going to be it's all going to be part and parcel. So it'll be interesting to see how all these things impact it, because I personally think fixed rates we're not going to see them drop anytime too soon. Like people were talking, we saw them I think they hit 3.99 for a week or two with some banks that were clearly just trying to undercut everyone else. but mostly the rates kind of sat around that 4.29, maybe 4.19 maybe for a couple of days. But now we're upwards of 4.39, 4.49, 4.59. So the rates are increasing, and as we saw with the bonds, the bond's gone up a quarter point in the last week. If it continues trending that way, then like there's almost a guarantee we're going to see rates closer to 5% again in the next few weeks. So leading into the spring, always interesting because lenders know that's where the bulk of the purchases are happening in the year. So, you like home purchases. So I think that we typically, well, at least historically, we see rates kind of, as a bit of a race to the bottom leading into February, March. But I don't know if we're going to see that this year. Like it feels like a very unique market when it comes to the interest rate side of things.
Yeah. I mean, if I think, and I speak to my clients about it all the time, right now, based on where bonds are at, where fixed rates are at, I strongly encourage people to look at a variable rate mortgage. We know those are trending down. We know that those are, you could convert them to a fixed rate at any time without any penalty. Like, go a variable, even if you're renewing, if you're buying, lock in that discount to prime as early as possible and look at converting later on when you start seeing the fixed rates with a 3 and 4. But right now, there's just no point. The variable rates are at the exact same rate as the fixed, or even better. It doesn't make sense to lock in fixed right now. In most cases, again, everyone's different. Some people don't want to think about or consider variable or worry about what the economy is doing. You just want to lock in and know what their payment is, and I understand that. And there's nothing wrong with that either. It's really, it isn't like personal, but from an advice standpoint, having been in the market now for 12, 13 years on the mortgage side, I would my strong advice is to lock in now that discount to prime. We've seen that compress as well. I talked about it. I talked about it in December and November to lock in those discounts to prime then. I think we're going to see as we start seeing the Bank of Canada decrease, we're going to start seeing that compression. And we already are seeing it. It was at prime minus 0.95, went to 0.85. Now it's prime minus 0.75 for most lenders. So we've seen it come down as they know they're losing. It may be the Bank of Canada's been lowering, and they're going to be losing that interest.
Yeah, and it's I mean, those conversations are going to keep happening. I'm interested to see what the majority of people do. I think I was talking to one of my lenders. I was surprised to see they said that 40% of their new business is going variable, which seemed to me like a very high number. All things considered, I mean, we've said this for a while now, but over the last 2-3 years is the only time historically that we've seen the variable rate higher than the fixed rate. So we're getting into more, seeing that the balanced market's there with inventory. I think we're also going to see, it's not termed a balanced market, but something where we actually see a normal market where variable rates are slightly lower than fixed and everything just stays consistent and kind of regulates itself. One thing I wanted to touch on, I know we've said this before, that we're all, you, myself, and Greg, we're all big promoters of buying in the winter. And my last 2 homes I've actually bought in January. And there's a few reasons for that. I saw this amazing post on LinkedIn yesterday by Nick Kite. He's an Ottawa real estate agent as well. And here's what he said. Here's reasons you should consider buying in the winter. And I completely agree with him. So number 1 is availability. It says with fewer buyers in the market, you may have a wider selection of options available with limited competition. This is 100% true. As we said, there's 5.2 months of inventory. But at the same time, I had 2 clients this week who lost out on multiple offers. So, there's a lot of options, but a lot of people shopping right now. Negotiation power. So it says sellers may be more motivated to sell during the winter months, giving savvy buyers more leverage to get the deal done. Lower prices. Winter purchases often come with adjustments in price and allow for buyers to leverage better terms and conditions. And then planning ahead. It says obtaining a longer close during the winter months can be more likely. This allows times for buyers that need to sell their own property, time to do so and plan to renovate, improve, and so on. I would agree with that. If you're shopping today in January, you can set a closing date for April or May. You can buy, basically, you can close in the spring, but get the winter month discount. You're getting the post-holiday reduction in price, but you can have a spring closing. So you are buying in the spring market, but you're getting the winter price, So I think there's a lot of advantages. I've basically taken advantage of that my last 2 homes, as I said, because homes were sitting. There's some reductions in prices. People had to sell. And you can, as a buyer, you can kind of keep your finger on the pulse. And obviously, if you're working with an experienced agent, they can keep you in the loop as to when those opportunities present themselves, and you can be in a position to win. You know, you want to win, David.
There's definitely a lot of opportunity in the winter, like you said. There's like need to sell for a lot of people right now. I just talked about 1.2 million people coming up for mortgage renewal. Like you said earlier, those are some of those are rentals as well. They're looking at like a maturity date in the spring when they possibly bought. You could buy in the January, February timeline, set that closing date out that matches what their maturity date is, so they're avoiding penalties, but they're needing to sell because they do not want to renew that mortgage. So there's a lot of opportunity.
I completely agree, David. I completely agree. Dave, should we get into the mood boosts?
Let's do it.
Okay, I was going to say, bit of a lag there. Making sure you're with me. Okay, so I got 4 today. I'm going to switch it up for 2025. So number 1, why was the cookie so sad? Because his mom was a wafer so long. Number 2, the other day I saw a baguette in a cage. It was bred in captivity. Yeah. Number 3, so I got this shout out to my father. My dad got me a legit dad jokes book just for the show as a Christmas gift. So here's one from the book. This one's for dad here. Do you struggle to keep your eyes open after using your iPad? Well, there's a nap for that. And last but not least, number 4, my girlfriend changed after she became a vegetarian. It's like I've never seen her before. Yes. Thank you, everyone, for tuning in. And we just want to take this chance as well to thank our sponsors. We love you. We appreciate you. Gerté Poirier, lawyers, avocats, amazing real estate law firm. We also want to thank Big Insurance in Westboro. And last but not least, Centum Canada. They're an amazing network, amazing umbrella that Dave and I are both under. And if you're a mortgage agent and you're looking for a new home, definitely have a chat with David. And Centum seems like a good home to be. So everyone, we'll be back next week. We're still going to air the shows 10 a.m. Wednesdays, 2025. We're back. David, we forgot to do our predictions next week because no one's listening anymore.
Next week.
All right. Deuces. Have a good week, everyone.